So today we're going to continue on the Bluetracer, finish up with the indicators, and talk of the peaks, how to identify these peaks. Okay, so the Bluetracer marks yesterday's high and yesterday's low, and we have learned that the previous day high, previous day lows act as natural support and resistance points. So basically they mark natural support and resistance points. So we use the Bluetracer to take what we call the Bluetracer trades, and a break and a retest of a Bluetracer gives us an entry. So on the period setup, we have learned that stop hunt goes towards previous important high or low. And sometimes it can go towards the previous day high or the previous day low, especially when you're taking the peak trades. So here it was a peak trade, and we come to talk of the peak trades. And the stop hunt went all the way to there, went all the way to the Bluetracer, and then formed a pattern there, and we had a down trade. So this is a peak trade. And we have moments like this when the Bluetracer has been broken, and then we have a retest. So this is like a break and a retest of a support area, or a break and a retest of a resistance area. So basically, when the market retests it, you find your entry there. So along a market maker trend, a break and a retest of a Bluetracer gives us an entry. We have the color coded session. We have the Asian session, which is the blue box. We have the gap time, the New York session, which is the red crimson, and we have the stop hunt boxes. We also use the traders dynamic index, and specifically we use it on the hour time frame. And if you look at our template, you only see it on the hour. So here are the parts of the TDI. Just like the RSI, we have these levels, which we have the level middle, which is the 50 level. So from down here going up is 0 to 100. So we have the level extreme low, which is the 20, the level low, which is 30 level, and we have the 50 level, which is the level middle. We have the level high, 70, and the level extreme high, which is the 80% level. So we also have this this yellow line, which is the market-based line. The market-based line is a linear weighted moving average with a period of 50. It's basically the level middle, which moves along with the market. So as the market goes up, you find it going up. As the market trends down, you find it going down. So it acts as the level middle 50, but it moves along with the market. We have the black line, which is the RSI price line. And usually it has a period of 21. We have the signal line, which is the red one. We have the volatility bands. So the blue lines, these are the volatility bands. So when the RSI price line, which is the black line, reaches these areas, the level extreme high, the level extreme low. On extreme high, we call it a bullish divergence. Like bulls have to be exhausted and we're expecting for a reversal. On extreme low, we call it a bearish divergence. Bears have to be exhausted and we are looking for reversals there. So when it reaches this level, this RSI price line, we have to look for reversals in the market. And this RSI price line would break the volatility band and come inside like this. So to break and then come back inside, or break and then come back inside, break and then come back inside, we call it a shark fin. So this is a shark fin. So basically, shark fin is used to identify a peak. So when the peak is formed and you find shark fin here on the TDI, on the R4 TDI, it's one of the confluences that the dealer is forming a peak. And usually peak resets have shark fins around the level middle. So just around the level middle, you find the shark fin there, then that's a peak reset. But for peak reversals, you find them on this level low, level highs, or level extreme low, level extreme highs. So sometimes if you look at the TDI, you find the levels. When the dealers form the peak, you find the levels there, like level 1, level 2, level 3, and the shark fin is there for a reversal. So sometimes you can count levels using the TDI. We also have the harmonic patterns, and these are also powerful on the R4 charts. Any other time frame than that, it's bullshit. So the harmonic patterns act as an alert service indicator for us. So we should only be alerted of a possible reversal. And when combined with other confluences, now you can be sure now this is now a reversal. So we have the gateways, we have the butterflies. Now the gateways are simply M's and W's extended in the R4 chart. As I said earlier, the patterns alone are not enough. Take this and combine with other confluences to get a high probability trade. So they can give us possible peak formation or possible peak reversal, but also it can give us a possible safety trade. So here we have, this is a bearish gateway. So it will appear like this, and you'll find these writings on your chart. Like this is a bearish gateway, and if you find this, it's a possible reversal for a sell. So we have this as an M. So this is an M extended on the R4 chart. So basically this was our first leg, and this now is our second leg M. So if you look at it and you find that other confluences, like if the cycle is complete, there's a TDI shark fin and all that. So it's an alert. It would add to the confluence that the dealer is now forming a peak for a reversal. And this is now a bullish gateway, which is an extended W. So this is our first leg, and this is now our second leg W. So for bullish gateway to alert us of a possible reversal for a buy. So here we had a shark fin on the level low. We had a very good W formed here after this shark fin. I mean, after the harmonic pattern has appeared. So the cycle was probably completed. So we had a reversal from there. We also have the butterflies. Now for the butterflies, we have this as the initial high that the dealer had formed. And then the market moved down. The market retraced back, came to break this high. So we have an area of liquidity pool right there, and then we have a reversal from there. So that's simply the meaning of a bearish butterfly. So for a bullish butterfly, we have the initial low, which the dealer comes to break it, and then we should have an uptrend from there. So that's what it means when a bearish butterfly occurs or a bullish butterfly occurs. So here we had the cycle was complete. The TDI shark fin was there. So we had a very good peak formation high for this reversal. So we'll come to talk of the implied support and resistance here. So these are areas of interest for speculators, and we basically use the indicators on the implied support and resistance. So if the areas of interest, they should be areas of interest to us too. So we have the Fibonacci tool, and here we'll be using the Fibonacci retracement tool. And the Fibonacci retracement levels that we're interested in are this one. So this is the Fibonacci level And with the description, the 0 level is our first TP or area for scaling in. The 0.62%, 0.62 is 62%, and 0.705 is 70.5%, which is the sweet spot optimal trade entry. We have the middle level, which is the 50% level, which is our equilibrium level. We have the 79% level. We have the 88% level as our second leg. So our second leg usually is from 80 to 88% level. And we have the 100 level, 107, which is the stop loss area, TP1, TP2, symmetric swing, and the 200 level. So Fibonacci tool works best when the market is trending, because the idea is to buy on a retracement at a fib support level when the market is trending up. So on a bull market,